Tata Motors have been buzzing for the past 3 days after the company came up with its Q1 JLR sales update, where the company witnessed really good growth in their retail and wholesale volume on the YOY basis, but they also highlighted that the current situation of the chip supply in the industry is not good. They are expecting this to worsen in Q2 from what the company actually witnessed in Q1. This will definitely impact the supplies for the company, where they are reducing their wholesale volume by 50% from what the company actually expected to deliver previously, and this might impact their financials as well, where the company is expecting to report a negative EBIT margin in Q2 of current financial year. Post this, we have been seeing a continuous decline in the stock price of the company. From 360 levels, the stock is now close to 300 levels, and after that the company also did an analyst con call. Let's catch the highlights of the same. Firstly, highlighting the chip supply situation in the industry, they expect the chip supply issue to improve in the second half of FY22, given the Japanese factory output gets better, because the current supply situation, as per them, is due to the fire incident in the Japanese supplier and issues due to the snowstorm in the Texas-based suppliers. So their major suppliers is having an issue. In the second quarter, they are expecting their wholesale production level to be in the range of 60 to 65,000, which is actually 50% from what the company actually expected previously, but they are managing their inventory levels well. By the end of June, their inventory levels were close to around 74,000 of units. But at the same time, the supply chain issues has some major issues persisting over there, but the demand is really good in the industry. They had not witnessed any order cancellations in the past, and the orders still continue to increase for the company, and the key geographies continue to support. Going forward, they are not expecting any of the significant launches to be delayed, because new RR is likely to be launched in Q4 of FY22. All eyes on that. And they also highlighted that the new production volumes of the new launches will be dependent on the chip supply. Coming to their capex plans that the company already mentioned, that for the full year they have planned capex of around 2.5 billion pounds. So as of now, the company has no intentions to delay their capex expenditure, and they expect the reversal of the situation going ahead to happen very quickly as the situation improves. One key major highlight from the con call was when the company talked about the industry. So this chip supply situation is not only impacting Tata Motors, but as for the company, this will have a universal impact on the other OEMs as well, despite of the fact they are coming up front and telling you about the current situation. On the guidance for FY22, the company is not coming up with any new guidance, but at the same time, they are not expecting any sharp reversal to happen in Q3, because they have already guided that Q2 might not be that great for the company. But going ahead, their revenues might have impact, but the company will actually will try to manage their EBIT margins really well, on which they are positive. Post this, we have got brokers' commentary on that. Major brokers, they did not make any changes to their rating or either their target prices for the company. Firstly, let's take up the note of Jefferies. They have maintained their buy rating on the stock with a target price of 435. In the con call, as per them, the highlights did trigger a profit alert for JLR. However, the company was quite sanguine on the demand and the ability to deliver margins once the shortage eased. The free cash flow guidance for H1 has a working capital drag, and this should ease in the second half and limit full year impact. Despite some near-term pressures, they believe a strong turnaround in the company. They have definitely made cuts in their EBITDA and EPS estimates for FY22, wherein they have cut FY22 EBITDA by 10% and EPS by 44%, but they have not made any changes to their FY23 earnings as of now. And the another note is from Nomura, where the brokerage firm has maintained its neutral rating for a target price of 353. The full production recovery could take up to 12 months as per them, expecting the second half of FY22 margin and cash outflow to be significantly better. The chip shortage puts FY22 JLR volumes at risk, and given the negative free cash flow, their FY22 debt assumptions have an upside risk. So the company came very upfront on what the actual situation is for the industry and how they are expecting the demand to be in the times ahead, and the brokerages on account of that have maintained their rating and the target price on the stock as of now.